Global markets, especially in Asia, fell sharply after US stocks went into correction territory. Dropping 1,000 points for the second time in a week, markets went down across the Asia-Pacific region, with China's Shanghai Composite Index at one point dropping more than 5%, as Hong Kong's Hang Seng also dipped more than 4%. Shanghai closed down 4.05% and Japan's Nikkei lost 2.3% rather. Korea's Kospi and Australia's ASX closed down 1.9 and 0.9 respectively. Currently, all major European markets are also trading in red, with UK's FTSE is trading down by around 0.6% and Germany's DAX also trading down by 1.3%. The broad concern in US that is bringing the markets down is that inflation is rising, which would pressure central banks to raise rates, making borrowing more expensive. Indian indices were also dragged down by the global turmoil, with Sensex closing down with the loss of 407 points and Nifty closing down with loss of 121.9 points. Over the past 1 week, global markets have been swinging between gains and major losses as concerns over higher interest rates continue to dwell on investors' minds. Joining me on the broadcast is WION's correspondent Paul Barber. He joins us from London. Hello, Paul. It's a bloodbath which is happening across the markets all over the world. What's the sense you are getting in London?
Yes, absolutely. As you say, a bloodbath. Looking down at my computer terminal here, it's all red. In fact, global markets are on course to have their worst week since September 2011. Well, as you were saying, we're halfway through the trading day here in Europe. Let's have a quick look at those latest numbers for you now. Here in London, the FTSE 100 index it's about 0.8%. It's been getting lower as the day's been progressing. In Frankfurt, the DAX is also down. That's down 1.5% at the moment. And the CAC 40 in Paris also down nearly 1.5%. So after a day beginning with slightly trading down, it is getting a little bit worse, but it's nothing compared to what we saw in Asia on Friday's trading. As you said, China saw particularly steep losses, the Shanghai Composite losing more than 4% and the Nikkei in Tokyo losing more than 2%. So some pretty steep losses over in Asia, but that wasn't really a surprise after the US trading on Thursday. Absolute carnage there. We saw the Dow losing over 1,000 points, or more than 4%. The S&P and the Dow, they're down nearly 10% from their record high just last month. So what's going on? Well, it's, as you say, we'll talk a little bit more about that in a second, but it's all about interest rates. But just want to leave you with a quick note on what could be happening in about 2 hours' time over in New York when the opening bell does ring. We could be ending the week on something of a high. Because why? US lawmakers have been up all night trying to thrash out a short-term spending spending plan. We've just heard that the House of Representatives has passed that, so it will be going to President Donald Trump's desk for signing. So we could be seeing a bit of a rally in New York when the opening bell does ring in just a couple of hours' time.
Also, Paul, tell us a little about the kind of sentiment one would be witnessing in the UK amongst investors in such a time of crisis.
Yes, well, here in the UK, I mean, we do have a pretty broad view, and if you look at certainly the global economy and the US economy, the numbers are pretty good. In fact, the latest economic data from America is very strong jobs data and very strong corporate earnings. The same can be said for the European Union as well. But the reason that prices have been going up, inflation, as you say, is the reason that we are seeing this potential raising of interest rates rather soon. So the Federal Reserve, the US Central Bank, said that that was likely to happen more quickly than expected. And we did hear that over here in London with the Bank of England also saying that interest rates could be raised here. But there's a lot of uncertainty here, of course, because of the ongoing Brexit negotiations, which haven't been going all too well. But nonetheless, the Bank of England says it still may raise interest rates sooner than expected. But raising interest rates, that's concerning for companies because it means it's going to cost more to borrow money, and it also means if you've got debt, it's denominated in dollars, it's going to be a lot more expensive to pay back. But analysts say this is long overdue and that this is correction territory that is very much expected.
Thank you, Paul Barber, for joining us with those updates and perspective.